I'm JD Frost, and welcome to the Accountability Show. We have a really awesome guest today. We've got Dr. Doug McCloy on the show. And if you've been watching the past couple episodes, we are diving into what creates a firm accounting foundation for your business. So we're covering different topics from week to week. And in these series that are basically by the month, this month we're talking about balance sheets and income statements. And we discuss the what, the why, and the how of income statements and balance sheets and each one of these topics. And so if you have learned a lot from this, if you have taken away any information that has helped you in your business, please like, share, comment below, turn on your notifications, tell your friends about this show, because the Accountability Show is teaching you practical knowledge that you can take back to your business and start applying it immediately. And the fourth episode of each month, we are talking with a special guest. And that's why we got Dr. Doug McCloy with us today. And we just want to have a conversation about this, like from a real life perspective of like your experience with balance sheets and income statements, and not necessarily, diving directly into your business unless you're comfortable doing that. I mean, we'll get into there. Yep. But I know that you've had so many different businesses over the years. And, truly understanding what does a balance sheet mean? What does an income statement mean? How have the numbers really meant to your business and how you've been going along? So that's what we're doing in the Accountability Show and in these episodes where we have special guests. So I really appreciate you coming on the show, Doug. And I was going to call you Doctor, and then I switched to Doug real quick. But I really appreciate you coming on the show. Thanks for doing it.
It's great to be on. I love these shows. So
yeah,
it's nice when I can get to be a guest on them.
You've got your own show too now that you started, don't you?
Yeah, we do it every Tuesday night about 8 o'clock. It's the 2020 Vision Show.
The 2020, and you're doing that every week, right?
Every week. 52 weeks for the year is the commitment for 2020.
And so what are you doing on that show?
Well, it's kind of a dual focus in a sense. How about I used focus? That's kind of a good word for
yeah, exactly.
But it's a dual focus in that we're going to talk about practical visual stuff, like for patients and people that follow us, from how their eyes work or what the risks are of their eyes and things like that. But the other component of it is just kind of telling the story about our history in Jamaica, our missional life that we've lived there for so many years, and the impact that really that God's had in our lives. Because there's a really crazy story that's gone on over the years. So kind of have a mix of guests that can kind of complete the story.
That have kind of been walking along the way.
And been involved.
Gotcha.
That have been influencers in it. But then also have guests on that we talk so that our followers can understand what do I do about my cataract? How do I treat glaucoma? So it's kind of a mixed focus, so to say.
And if you haven't figured out, Dr. Doug McCloy is an optometrist.
I am.
Eye doctor. So he has an incredible mission called Mission of Sight in Jamaica, where he's helping blind people see. And they also have eye care called Professional Eye Care down in Jamaica. 6 different offices down in Jamaica.
That's right.
And so, their business is run like a well-oiled machine. And what's cool about Mission Aside is it's a self-sustaining nonprofit organization, which is a model that I actually have. I haven't even told you about this, actually. But we are talking with some new possible partners, even with Croft, from a standpoint of marketing partners, and also from a business consulting, and how we're going to be able to bring them in and to help our clients. And they have a mission of solving childhood hunger in the United States. And what was really cool about their mission is a lot like yours, is that they want to create self-sustaining nonprofit organization that's supported by businesses that they consult, and they take a piece of the profits of those businesses.
There you go.
And that's what funds the nonprofit. And so they're helping the business owners with their business acumen and how they've been successful and what's worked and what's not. And then they're helping the organization because the business is successful.
Yep.
And that's kind of how you set up Mission of Sight.
It really is.
And so he was like, I don't want to have $1 million gala to raise $2 million. I would just rather have businesses that are successful, that are constantly keeping the organization going.
That's it, because you can rely on them. As long as they're successful, you're going to always have that feed of success into the nonprofit.
Right.
And, we still tap into the charitable other
giving
effects as well.
and-
Yeah, giving and donating and all those other things. Those are all really important. They help us to enhance what we do. But the bloodline is to have that connection, I believe, with private enterprise.
Yes.
To be that feed that you're supporting them and they're supporting you and you're working together in a synergistic manner.
Well, and that makes me think about the well fund that we just
Yeah.
started too. Even thinking about possibly getting other business owners that are investors in that. That it might be a good thing to have an aspect of that organization too. Now that we're just talking about it right now, like we should probably have some kind of aspect of that. Even our own businesses, maybe not professional eye care that's already supporting mission of sight,
Right.
but even JD Frost and Company and Croft, putting a portion of profits into that organization. I mean, it's a great model.
It is. And it's kind of, I wouldn't call it a requirement, but I think it's our duty as business owners to be charitable, to do something in a nonprofit fashion. Give a portion, give a percentage to a nonprofit fashion.
To be
that's
helping our
others.
local communities.
Yeah. Because when you try to mix it all into one, like you make JD Frost to be that too, I think it gets mixed up. So to identify, this is where we're at, this is what we're doing, this is our cause, this is our mission, and how we fund it.
That's a good model for us. Anyways,
Yeah.
I digress. But in order to have those donations coming in
Yep.
from those operating entities, you got to have a balance sheet and income statement, right?
Absolutely. I mean, if you don't have that, then there's nothing to work with.
Well, it's hard. It's
And
hard
it's-
to manage the business and to have it operating like a well-oiled machine. And I know you work with your wife, Rhonda.
Oh, yeah.
Give a shout out to Rhonda real quick.
Big time, Rhonda.
She's
the boss lady.
She's awesome,
Yeah.
right? Like operations. I mean,
Yeah.
I feel
Spreadsheets.
it just in her presence. I'm like,
Exactly.
I stand a little bit taller and like, I just do,
Straight up
Like,
your She'll laugh about that. That's what her mom taught her when she was young, is you should always have your shoulders back.
not in like an intimidating way. You know what? I hope you know what I'm saying. Like,
no, she gets it.
but yeah, I mean, so shout out to Rhonda and what she does in the organization from an operations perspective. But I know you and I have had a lot more conversations recently about balance sheets and income statements, and in our relationship, what we've been doing for you from an accounting perspective over the last year and a half, it's just kind of come into our regular conversation a little bit more. And I know sometimes you're like, what the hell are you talking about? Like, what do you mean?
Right. Yeah. Well, I'm still really the basic. My background is being the doctor. My background is not being the accountant. So
Obviously.
So what I've always looked at along the way is maybe it's old school, but I always call it the profit loss. You always refer to it as the income statement, I think. So
It can be called either one.
yeah, so maybe wherever I'm at, I've always looked at profit loss, and that's all I ever looked at. Whenever I saw the word balance sheet in the reporting, I just could never figure out what it is.
Right.
So I'm like, I don't even know what that is.
Right.
Like, so I do know that if it says there's $100 left over at the end of the month on a profit loss, I feel like I made $100.
It doesn't necessarily, the balance sheet tells you whether or not you have $100 left.
There's the clarity that I was looking for.
That's
The
it. We're
balance
done?
sheet tells you.
All right, the show's over.
Yeah. Yeah.
But yeah. So yes, the profit and loss is what a lot of business owners run their business off of. Just like you're saying,
Yeah.
and every business owner, when we do audited financial statements or reviewed financial statements, I mean, I love it. It's like, go to page 5. Like I just say, go to page 5. That's where your income statement is. I know that's where you want to go because you want to figure out, did you make money or not?
Right.
But you don't know if you have money or not until you look at the balance sheet. And that's what's been so interesting over these last few months, that we've been dealing with coronavirus and COVID-19 and stimulus packages, and where business owners really stand is because when you go into an economic crisis, you're more worried about what you actually have, which is the balance sheet, rather than what you have the potential to make, which is the income statement, or lose.
Right. So we really modified our income statement in a sense during the COVID game, where we said, okay, we are going to expect that this is we're only going to bring in X amount of dollars because everything's being reduced by 50%.
Right.
And then so we said, well, we have to adjust our expenses down to 50%. So we had to find a ways that if we were only going to make $100, we could only spend
gross revenue.
We need to make sure we weren't spending 250 still.
Right.
So we really focused there. But the beauty was understanding a little more about the balance sheet is what do we actually have in our account right now to help us weather this storm, or what do we actually have at the end of the day?
Yep.
And that's where the balance game is at.
Right. Exactly. I mean, and that's why these stimulus packages are trying to put cash into the pockets of small business owners so that they can survive if they didn't do the proper plan like y'all did, saying, okay, we're only going to bring in this amount of revenue. We need to cut our expenses, which is a great plan, because then you're going to be limited on the amount of money that you're actually making, that once you make it, then it goes over to the balance sheet. Like, the income statement is a period of time in which you are producing profit, make a profit, generate cash. But then once you make that profit, where does it go? It goes to the balance sheet.
And are your
Balance sheet's like your bank account for all your account balances.
Is that where your assets and your liabilities are at too on the balance sheet?
Right. Yeah. Your assets equal your liabilities plus your equity. That's the equation.
Now, see, that's a whole nother story for me, because that's the part I never really get.
What do you mean you don't get it?
Well, it's like that thing always equals zero or something, or like the assets always end up equaling your liabilities.
Right. It balances. It's a balance sheet.
Oh, that's why they call it a balance sheet.
That's why they call it a balance sheet. Yeah.
But
and Doug's being completely real.
Yeah,
right
I'm
now,
being
by the
all
way.
real
like,
right
this
now.
isn't like
Yeah, this is not. It's not staged.
I appreciate your
This is
vulnerability.
vulnerability right
yeah,
here,
I mean, and that's what it is. Like, that's what I mean. I really appreciate that, because it's like, yeah, I mean, this is complicated stuff, and it's so complicated. Most people just say, I don't even care.
That's what I've done for 25 years.
Yeah.
I've just known, okay, we're not.
And your
we're not
business
done.
has still been wildly successful,
Yeah.
still done very well. So, like, this isn't the end of the world. It's just more bringing awareness. Like, if you really want to know where your business stands at a picture in time, you need to look at the balance sheet. You don't need to look at the income statement.
You used the
The
golf
income
analogy.
statement is a period of time.
I want to hear about the golf analogy you gave me, though. It's like the income statement was like playing hole by hole, but the balance sheet was like you start on the first hole and you end on the 18th hole.
Right. Yeah. You have your beginning balance, which at the beginning of golf is 0. And then your ending balance, if you played really well, is going to be 75. But what happened in between? How did you get from 0 to 75? That's the income statement.
Yeah.
That's the period of time. So then when you leave and go home and you're done playing golf, your ending score was still 75. Well, the next time you come back around, you're starting back at 0 because you're starting over, but you have that balance already. And then those series of balances, I'm going to drive this golf analogy straight into the ground. Those series of balances make up your handicap. So your balance sheet, in essence, is the health of your business. Your business health is determined by your balance sheet, and that health goes up or down as period of time goes by. Just like your handicap is your golfing health score. How good are you, or how poor are you at golf, and how do you compare to others? The balance sheet is what most are going to judge the health of a business, and you want to have as liquid as assets as possible on the balance sheet and as little debt as possible on the balance sheet, so you maximize your equity. Remember that equation: assets equal liabilities plus equity. Assets equal liabilities plus equity.
Right.
So as your liabilities go down, your equity and assets go up.
I can get that formula.
That's
You had
it.
to say it 3 times for me
Right,
to get it.
but
I think I'm
assets equal liabilities plus equity. And I'll keep saying it because it's so important, because as I've been doing these shows and everything, it's even become more apparent to me. The more you talk about something, the more you teach it, the more you kind of start to put it into your own life. I mean, this is stuff that I'm having to do in my own business as we are growing rapidly and having to make decisions. We're making better decisions now because every decision I'm going, what is that doing to that equation? Because that decision affects that equation one way or the other. Paying down debt grows equity, decreases my assets.
Paying down debt grows equity, decreases your assets.
Because I'm using cash to pay down that debt. But it grows equity.
But it grows equity.
Right.
Yeah.
So then I've got to replenish my assets. So I need to make more money. I need to increase my profits. So all these decisions that we start to make, if we're making them with that equation in mind, then we know what the result of that decision will be when we're making it immediately. Because the thing that most business owners, we're making decisions. You probably know this. Y'all have all, I mean, Rhonda, we talked about Rhonda, like she's making like calculated decisions.
Oh, yeah.
And that's what you want to be doing over a long period of time.
Mm-hmm.
That's going to yield to wealth.
It does. And diligence.
Yes.
Staying committed to those decisions.
That's right. That's the other hard part.
That's the hard part. It's like, oh, you got a little money in there. Let's go spend it.
Right.
No, stay diligent to the path that you're on.
Right.
So talk to me then how those income statement and the balance sheet defines your net worth. Like I always know, like if we're going for a loan, I've got to give them my financial statement.
That's your
like
personal financial statement, which is your personal balance sheet.
Do companies have a net worth? Like, do companies have that way?
That's the equity. So net worth equals assets minus liabilities. That's equity. Equity is the same thing as net worth.
Okay, net worth, equity, same,
intertwined.
synonymous.
It can be called members' equity. It can be called retained earnings. It can be called partnership capital. It can be called net worth. The net worth of a business is the assets minus liabilities. So it goes back to that one equation, assets equals liabilities plus equity. If you want to understand exactly what your net worth is, you're going to subtract your liabilities from your assets, and that's going to tell you what your equity is.
Yeah. So you can have a game where my profit loss sheet or my income statement might show I made $20,000 for the month.
Right.
But over on my balance sheet, if I've got like some big mortgages, mortgage payments, and
a lot of liabilities, you don't have that 20 grand.
I don't really have it.
Nope. You made it, and that's great, but you had to spend it on your debt or pay down your debt. So it's cash out. So that's what I talked about in future episodes. We're going to be discussing the cash flow statement. That's the next series. And in the cash flow statement, that tells you where your cash goes.
And that's different than the balance.
I might need to have you as a guest on that one.
I think I'd come back. I could get some education.
Because it kind of all goes in flow. But to your point, all right, I made 20 grand this month, but there's nothing in the bank account. Where did it go? I hear that from business owners all the time.
Yeah.
Where did it go? Well, it was distributed out to you as the owner. You put it in your personal bank account, and then you spend it on your boat and all your other stuff.
Yeah.
Right? Like, or you had so much debt on the business, it went to liabilities. But in that equation, as you are paying
down on that
liability, you are building equity.
Yeah. And if your asset is gaining in
well, so then also
value
your
too.
long-term asset will be increasing at the same time if that liability was related to an asset that you purchased. If that liability was only related to the operations of your entity and working capital, all that kind of stuff, your asset would be basically your accounts receivable for the work that you did.
Yeah, and haven't been paid on.
Yeah, I mean, we're getting like super deep right now, but you can kind of see how it starts to intertwine. I borrowed money in order to operate my business, so now I'm billing out more business, billing out more services, products, whatever you want to call it, and that's growing my accounts receivable. But we both know accounts receivable is not cash.
No, it's almost a phantom.
It feels like a phantom income.
Yeah.
And a lot of taxpayers that are on the accrual basis for their tax return, they're paying income tax on the accounts receivable rather than the cash that's actually in their bank. And that's one of the 5 pillars of mastering tax strategy. We make sure you're on the correct tax method of accounting.
Accrual versus cash.
Right, exactly. But I digress. That's so why it's so important is to understand that, yes, you're truly making money, but are you keeping the money? And the balance sheet is determining whether or not you have kept money or kept certain balances or used money in a certain way.
Yeah. You know, I just had the word financial literacy just popped up in my brain. Like I've really been so illiterate. Like I've been functioning in business for years and really have not been able to read financials.
Right.
You know, like, so you think about how can you do well in school if you can't read a book?
Yeah.
You know, how you can do well in business if you have a good trusted accountant or advisor who can help you through that stuff. But I was just thinking, geez, if I'd have just learned this like in high school,
right,
or even in college,
right. Well,
and
it's more of the real understanding comes from what makes up those balances. So the simple way to look at a balance sheet is if you just printed it off,
Yeah.
And the question you want to ask yourself, and this is what I do when I'm working on any tax return, when I'm working with any client, making sure that their books are right. Like, who says, I want my books right? I just want them right. Make them right. Well, what's right is different from one accountant to the next, from one person to the next. It doesn't matter. But what you want to ask yourself is, what made up that balance? How was that balance created? So start with the first balance of cash. How was the balance of cash created? Where is it? Where would you find out? And you might not know the answer to this, but I'm just going to ask you to guess. Where would you find the balance of your bank account?
In my checking account, I go online.
On your bank statement,
Yeah,
right?
right.
So when you're trying to learn and get better at understanding a balance sheet, your first step is to go, okay, my cash account
Cash on hand.
is, I need to go to my source document, my bank statement. This is what we do when we do a review or an audit. We're verifying that the bank statement says what's on your books.
Yeah.
And the difference between those two things is what's called the reconciliation.
Oh. That word.
Reconciliation. I love it.
It's a really good word.
I
actually.
love accounting because it always comes down to zero. It always balances. There's always a way to correct something through a journal entry,
Yeah.
and there's always a way to reconcile. You can always make sense
Boy, if
because
life were just that
accounting
way.
forces you to balance. It forces you to balance. And that's what I love about it. So when your bank statement says $1,000 and your books say $0, you have a reconciling item.
Yeah.
So you've probably written a check out of your books that hasn't cleared the bank yet. That's called an outstanding check.
Right.
So when you have outstanding checks on your book balance, you add those back to make them equal the bank.
Yeah. That's why you can't really your checking account or your business won't lie to you. Like, if you're not running it well, it will go broke.
Yes.
You know, like, I was just thinking about the base of reconciliation. I think of relationships too, you know, like the relationship between you, like me and you. Let's say me and you got a little tiff, you know, and we're not balanced in our friendship.
That's right.
We
Yeah.
have to reconcile. We have to figure out a way to get ourselves back to zero, or I would say 100, you know, like,
Yes.
to get us back together. So, you know, relationships can play that game and never really get reconciled, but your accounting, your books, you have to, because you won't keep working if it doesn't do it.
That's right. You can always get back to an answer. And there's always an answer for, like what you were saying on the income statement. Hey, it shows I made $30,000. Where's my money? I can always show you where your money went.
Yeah.
If the balance sheet is balanced, which most people using QuickBooks in their business, the balance sheet is balanced. There's probably some money in the wrong places, some balances in the wrong places.
Yeah.
So like we keep going down those balances. Your AR, you need to go to an AR aging report to figure out what your balance on your AR is.
Yeah.
But there's always a way to figure out, where did that 30 grand go? Because I know I made it, or did I truly make it? Did I have an expense that went on the balance sheet that didn't get on the income statement?
Oh,
Did it get recorded in the wrong
in
account?
the wrong account and category. I've seen that
So
happen.
yeah, it shows I made 30, but I go over here in my credit card liability, which I've seen this on go to your income, your balance sheet, and see if you have a credit card liability that has a negative balance. If it has a negative balance on the balance sheet, that means that it's an expense.
Yeah, that's the part I think makes me tricky on those balance sheets, is they have negative balances on them.
Right. So assets have a natural balance of a debit. So on a balance sheet, when an asset is in its natural state, it's a positive number on the balance sheet.
Okay.
Cash in the bank, $1,000 positive.
Positive, yes.
If your asset has a negative balance, it's not in its natural balance, there's something wrong with it. Because all your balances on your balance sheet should be positive on the asset side, and they should be positive on the liability and equity side.
That's the part that gets me. How can a liability be positive? Like that's like a loan. That's like a...
So a liability's natural balance is a credit balance.
Oh.
So a debit is on the left, a credit is on the right. We are in balance. This is getting really deep here.
Well, it's
I love
good.
this stuff.
It's
Like,
good.
can you see me like getting
I see
excited
your face
about
getting
this?
excited. Like,
I love this stuff.
yeah, like...
Most people don't get to see this side of me but this is the kind of conversation we have with clients.
Yeah.
So the natural balance of a liability is a credit balance
That helps me a lot.
as
understand
opposed to the natural balance of an asset is a debit balance. So that's why you have a positive number in the liability.
it. See, that part tricks me up, though. Why would the asset be its natural state a negative balance if that's like my $1,000 that's in my checking account?
But its natural balance is a debit, which is the opposite of a credit,
Yeah.
which allows it to be in balance. An equity account, their natural balance is a credit. Because remember the equation, assets equal liabilities plus equity.
This is why you need a good accountant. No, really. You know what I mean? Like I'm thinking, if I'm going to spend all my time trying to figure that out, I should just go do some eye exams. That's what that's what I'm good at.
You're right. You are
but
right.
I do need to understand
as an
it.
owner, you
Yeah,
do
you need
need
to
to
understand
try
it,
to understand and continue to learn. You might not get it all right now, but
Yeah.
you just said that the natural balance thing. Have you ever heard that? Did you ever hear about that?
No.
That the natural balance of an asset is a debit.
No, I've never heard that before.
And you know what's even more confusing is at the bank, it's exactly opposite. Because at the bank, a liability to me as a business owner is a receivable to a
them,
bank
to them.
because that's
Yeah.
their assets.
Right.
So a bank
Has a whole different.
is completely opposite.
So you have the whole world of business out there doing it one way, and the banks do it an entirely different way. Are there any other entities that do
Yeah,
it different?
because when you
we're
put
loaned.
money into the bank, it's a credit balance.
Yeah.
When you put money into your books on your business, it's a debit balance. But that's part of the balance.
Yeah.
It's a credit over there, debit over here.
Yeah.
I love it. But yeah, that's what makes it even more confusing. 'Cause it's like the bank is completely opposite of my business.
Right.
That's right. It is. It's hard to reconcile that. That's why you have to reconcile with the bank to your business because they don't see everything that's happening in your business and your business doesn't see everything that's happening on the bank account all the time.
Right.
Because the bank might charge you a service charge. They might have a miscalculation of an interest payment. One of my banks, they weren't charging me correctly on my note payments. And I had to call them out on it. And the only way that I knew that, and it was a big number, it was about $75,000 difference.
Hey.
And it was to my detriment, unfortunately. But when I was reconciling the accounts, I saw this isn't making any sense.
Yeah.
They're not charging me correctly. And they were like, oh, thank you. Thank you for telling us about that. You owe us $76,000 more. And I was like, well, that sucks.
Oh, you actually to your detriment. Yes.
To my detriment.
Wow.
Yeah.
Well, see, that speaks to your integrity as an accountant.
Well, I mean, but that
It has to balance
accountants, yes, accountants have to have integrity. They have to. That's why they're the most trusted business advisor because it's just not in our DNA.
Well, it's not legal.
It's not legal either, but it's
right?
but naturally accountants, and this is why you should rely on them more. Not even me. Whoever your advisor is, whoever your accountant is, your CPA on the tax side of things, it's in their blood, it's in their mind, it's in their soul to have things balance.
Yeah.
That's what they've been studying their whole life.
Right.
They're always looking for the balance. That's why they're kind of dull, right? Like because they're just like, oh, okay, cool, balance. Like we don't want excitement.
Yeah, we just want it to be level
I
all
kind
the
of
time.
personally like excitement, but
Yeah.
I mean, as I'm growing and changing, I'm kind of liking the dull. I kind of am.
It is kind of nice sometimes.
It's nice, yeah. I like cool videos that Jay makes. I do like that. That's kind of interesting. But but that's the interesting thing is that they're always looking for that balance. Assets equal liabilities plus equity. That's the main thing that you need to remember from a balance sheet perspective.
Assets equal liabilities
Plus equities. You can solve any accounting problem if you know that equation.
I want to write that down.
So
Put it
you
in my
remember
phone,
it.
my notes. Yeah, message you back and forth on that one.
Exactly. Well, thank you so much for coming on the show, Doug, and sharing and being vulnerable and like asking. Those were really good questions. I really appreciate that.
Good.
I obviously, you can tell I get really excited talking about this stuff, which, you know, I never thought I would. I actually hated accounting in school. I didn't really have a love for it until I got in the real world and started helping people solve problems with it and realizing that you can solve problems with it and actually have an effect on somebody's life with it.
Yeah.
It's not just, are we accounting for leases correctly? Whatever, right?
Yeah.
But are we able to read this? Are we able to understand? Are we able to make decisions off of it? So that's what I really enjoy. So thanks for tuning in to the Accountability Show. Thanks for being on the show. Like, share, comment, and turn on your notifications so that you know when we have a new episode. And also, those listening on the podcast, please write a review for me. I would really appreciate a review. I'd love to hear some feedback about what you like, what you don't like. Is it too short? Is it too long? Would you like to hear more about a certain topic? If you're following me on Instagram at jdfrost.today, I would love to get feedback from you and learn more about how I can help you, how we can help you at JD Frost & Company and Croft, and provide you with more information to help you run your business and to provide balance in your life, right?
Ooh, that's a good tagline.
Yeah, that's
Everybody
what I'm
wants a
talking
little
about.
balance in their life, actually.
And I'm very excited. I'm writing an ebook. You don't even know about this. I'm writing an ebook about the ledger.
Oh, the daily ledger or just the ledger?
The ledger, just the ledger. I'm calling it the ledger. What is it? How to hold yourself accountable.
Ooh.
So it's going to be an ebook. So be on the lookout for that as well. So thank you so much for tuning into the show again, and we'll see you next episode.